The Sam Laprade Show continues on City News.
101.1 FM and 1310 AM.
Well, when I think about the Bank of Canada, I always think about Clinton Wilkins. He always joins me here on these important days where the Bank of Canada makes an announcement. Clinton joins me now. Hi, Clinton.
Hi, Sam. How are you doing?
Good. Clinton is from Centum Home Lenders Limited. We heard from the Bank of Canada a little bit earlier today. They're going to hold the key interest rate at 5%. This was a relief, I believe, for many, but very quickly, Tiff Macklin shared that it doesn't mean that there's not going to be other rate increases to come.
I agree. The inflation's going in the right direction. I don't think it was quite where, they wanted the last couple months. But the impacts from the increases the last 12 and 18 months now are really happening, Sam. I think Canadians are spending less, and the inflation's going in the right direction. Some economists were really on the fence whether it was going to be a hold or whether the Bank of Canada had another 0.25 increase in their arsenal. But today they've decided to hold, and I think a hold is optimistic for Canadians. We've been through a lot with these interest rates in the last 18 months with the increases. And I think in a more plateau situation, even knowing the rates are high right now, it's a lot easier for people to plan and make decisions around the next few months. The Bank of Canada is not meeting again until the end of October. October 25th is the next meeting. So I think if the inflation numbers are, where they're at or even in an improved situation, I'm optimistic that we will continue to be in a plateau.
And after October 25th, what's the next date, Clinton?
December 6th, I believe. Okay. It's the first week of December is the final, December 6th, the final rate announcement of the year. And, I think if we hold in October and, we're still going in the right direction, I'm optimistic that it'll be a hold for the rest of the year. Some economists think that, if we do continue to see this downward trend in inflation, rates may start softening midway through 2024. So I'll follow my sword, Sam. We'll have to write this down. Midway through 2024, we might start seeing some softening. Mm-hmm. And I was on with your colleague in Halifax just before I was on here with you, and he asked, how long do you think it's going to be before rates are back to, a more normal or balanced situation? I suspect on the way down, Sam, the rates are going to be much slower to reduce than they were to increase.
Yeah,
that's my prediction.
Unfortunately, I don't even do this, like you do, but I feel the same way in terms of the rates, and a lot of people, Clinton, right now kind of holding their breath. They might be up for renewal on their mortgage. Mm-hmm. They might be trying to get into the market. They might be thinking, geez, should I get out of this variable and try to get into a fixed rate? Some advice for us.
Some people, I would say that the trend is really moving into shorter-term fixed, and the shorter-term fixed are not necessarily less expensive than the existing variable. A shorter-term fixed, you're somewhere in the 6.5% range. The reason that people are taking a shorter-term fixed, it's not because it's necessarily cheaper than the variable would be, but it's providing people with stability and payment certainty. And right now, that sometimes has more of a value than maybe a lower interest rate. Mm-hmm. And, the reason that a 3-year fix, for example, is so popular is because if the rates do start softening next year, Sam, it's going to take a couple years for really that softening to then take effect and, for the rates to come down. So I would say 3-year fix is one of the most popular. And historically, Canadians take a 5-year. 60% of Canadians take a 5-year interest rate. So we're definitely in a different situation. Many Canadians have their mortgage coming up. I think more than 50% of people who have their mortgage coming up for renewal in the next 2 years. So the bulk of those borrowers are going to be renewing into a higher rate. So obviously that's going to have an impact to many people in terms of their monthly budget. And I think anybody who has their mortgage coming up for renewal, you really need to get some financial advice on what's going to work best for you. And I think seeking unbiased advice from a mortgage professional is really important, because you may look at something like changing lenders, and maybe then you can leverage to get maybe a better interest rate, or potentially reworking your mortgage term and taking a longer amortization. I know we talked about that before, mm-hmm. and that will reduce the payment. And not necessarily reduce the cost of borrowing per se, but maybe the cost of monthly cash flow.
When is it a good idea, Clinton, to kind of pay that penalty to get out of a mortgage before before sort of changing into maybe a variable into a fixed, and the rate of that penalty? When's it a good idea, and when maybe to stay away?
I get asked this question every day. I think first finding out what the penalty is, I think that's really important. And then I think secondly, really evaluating what your plans are. So, we have customers right now that are choosing to break their mortgage term early, some that are in a variable, and pay their 3-month interest penalty. In many cases, $3,000 or more sometimes can be capitalized on the new mortgage, and clients are choosing to do that for stability. It's not necessarily going to save them money. So if we look at what the penalty cost is and we look at what the new interest rate is, if the prime rate even stays the same, they're not necessarily going to save on a daily basis or a monthly basis, but they're choosing to do this because of stability. Mm-hmm. So I think that's one thing that you really need to think of. I think right now, to break any mortgage early, it's likely not going to be cheaper. Yeah. Just taking into account where the rates are today and what the penalty is. Mm. So I think the reason that people would break a mortgage early right now, Sam, is for that stability piece, or if they need to pull some equity out of the property.
Right.
If you bought a property prior to 2020, you probably have some equity in it, even with the prices being softer in some markets. And I think that's something to think about as well. Some people are choosing to pull out some equity to maybe get some other unsecured debts cleaned up. But I would say the number one reason that we're seeing people break their mortgage early is to take a longer amortization.
Brilliant, as always. Appreciate your time, Clinton. Always great advice, especially on these important days for Canadians. Thank you.
Thanks, Sam. Have a great day.
Clinton Wilkins joining us today from Centum Home Lenders Limited, talking about the Bank of Canada holding the key interest rate at 5%. Some thought maybe do 25 basis points, but in this case, they held it at 5%. Next time around, you just never know. Tiff Macklin indicated that he may be looking at raising interest rate depending on how inflation goes.